Alright folks, gather round for a crash course in the wacky world of cryptocurrency. Cryptocurrency is basically digital money. It's not something you can hold in your hand or stuff under your mattress. Think of it like this. If regular money is like a juicy steak, cryptocurrency is like a picture of that steak on Instagram. It exists, but only in the digital realm. And just like how that picture might make you hungry, cryptocurrency can make you financially hungry. It's a form of currency that lives entirely on computers and the internet. Unlike regular money, which is controlled by governments and banks, cryptocurrency is controlled by no one really. It's like if your money had a mind of its own and decided to go backpacking across Europe. It's free, independent, and probably a bit confused about exchange rates. By the end of this, you'll be throwing around terms like blockchain and mining like you're some sort of digital prospector, and who knows, maybe you'll even understand what they mean. So strap in because we're about to dive deeper into the rabbit hole of cryptocurrency. Exciting, isn't it? Now let's talk about blockchain. It's actually the backbone of cryptocurrency. Think of blockchain as a really long receipt, but instead of listing all the junk food you bought at 2 a.m., it records every single transaction ever made with a particular cryptocurrency. This receipt isn't just sitting in one place. Instead, it's copied and distributed across a network of computers all around the world. Every time a new transaction happens, it's added to every copy of the blockchain simultaneously. This system makes blockchain incredibly secure. If someone tries to tamper with one copy of the blockchain, all the other copies will disagree, and that tampered version will be ignored. It's like trying to convince the world that you're actually 7 feet tall when everyone can clearly see you're not. Now, let's dig into the nitty-gritty of how these transactions actually get verified. This process is called mining. But before you grab your pickaxe and head for the hills, let me explain. Cryptocurrency mining has nothing to do with soil and everything to do with solving really hard math problems. When someone makes a transaction, it's broadcasted to the entire network. But before it can be added to the blockchain, it needs to be verified. This is where our digital miners come in. They use powerful computers to solve complex mathematical puzzles. The first miner to solve the puzzle gets to add the new block of transactions to the blockchain, and as a reward for their hard work and electricity bill, they get some shiny new cryptocurrency. The verification process also ensures that no one can spend money they don't have or spend the same money twice. It's like having a very diligent accountant watching over every transaction, except this accountant never sleeps and is actually a network of computers spread across the globe. Section 4. No boss, no problem, the beauty of decentralization. Now let's talk about one of the key features that makes cryptocurrency enthusiasts foam at the mouth with excitement: decentralization. In the world of crypto, there's no big boss, no head honcho, no puppet master pulling the strings. This lack of central authority is what sets cryptocurrencies apart from traditional money. There's no government or bank controlling the supply or deciding who gets to use it. It's financial anarchy, but in a good way. The decentralized nature of cryptocurrencies means that they're not tied to any particular country or economy. They're like the James Bond of currencies, international, a bit mysterious, and prone to wild fluctuations that leave everyone shaken, not stirred. This global nature makes them potentially useful for international transactions. No more worrying about exchange rates or whether your bank has a branch in Timbuktu. But decentralization isn't all sunshine and rainbows. It also means that if something goes wrong, there's no help desk to call, no manager to complain to. It's financial freedom, but with a healthy dose of you break it, you bought it thrown in. Section 5, from pizza to Tesla's crypto in the real world. Now you might be thinking, John, this all sounds very interesting, but can I actually buy anything with this magic internet money? And the answer is, drum roll please, yes, but also no. But mostly yes. Cryptocurrencies are gaining traction in the real world, slowly but surely. It all started with a humble pizza. Back in 2010, a programmer bought 2 pizzas for 10,000 Bitcoin. At the time, that was worth about $41. Today, those same 10,000 Bitcoin would be worth, well, let's just say he could buy the entire pizza chain and still have enough left over for a small country. Since then, more and more businesses have started accepting cryptocurrencies. Section 6. The future is crypto. Maybe. So, where is all this heading? Will we all be paying for our morning coffee with Bitcoin in the future? Will the dollar bill become a quaint relic like the floppy disk or my chances of ever doing a pull-up? The truth is, the future of cryptocurrency is about as clear as a mud puddle in a sandstorm. On one hand, it has the potential to revolutionize how we think about money and financial systems. It could make transactions faster, cheaper, and more accessible to people all over the world. On the other hand, cryptocurrencies face some pretty big challenges. There are concerns about their environmental impact, their potential use in illegal activities, and their notorious volatility. Governments and financial institutions are also trying to figure out how to deal with cryptocurrencies. Some countries have embraced them, others have banned them, and most are somewhere in between, scratching their heads and muttering, "What is this newfangled interweb coin thing?"